If you're a day trader or a deal flipper, you're not going to find any useful information in the content of this video. Today we're going to focus on the long-term investor. I get asked all the time, how does owning interest in an oil and gas well stack up against the stock market? Well, today we're going to do a true apples to apples comparison of a typical S&P 500 index fund and direct working interest in an oil and gas well. To do a true apples to apples comparison on purchasing stock and purchasing oil and gas, there's a few things that we do need to fix. The biggest one is the variable of the stock going up and down, and same for oil and gas going up and down. We're going to look at investing $100,000 in both investments from year 1 to year 4. One of the biggest things to remember about investing in oil and gas is you can typically write off 85 to 100% of the investment in the year it's incurred. For the stock option, right here, you're going to see the S&P 500 index fund. You're looking at a typical of 1.5% dividend a year, and I'll show you how that works. So year 1, you invest $100,000. A full calendar year later, you made a 1.5% dividend. You made a profit of $1,500. So year 1, we'll put up on the board $101,500. Year 2, now again, I know you number guys are going to say, oh, it's a little bit more than that. I'm just using round figures for this presentation. So year 2, you're $103,000. Year 3, you're going to be $104,500, and year 4, $106,000. So you invest $100,000. 4 years later, you made a profit of $6,000. Now, let's take that same $100,000 investment and place it into direct working interest into an oil and gas well. Don't forget that initial write-off of 100% of your investment if you utilize bonus depreciation, but let's say we're generating $2,000 a month in income. Year 2, you made, year 1, you made $24,000 in income. Year 2, you're at $48,000 in total income. Year 3, $72,000, and year 4, $96,000. So if you compare the two of them side by side come year 4, people would naturally say, wow, come year 4, I made $106,000 in the stock, and I only made $96,000 in oil and gas. But you saved roughly $35,000 that you saved the money you would send to the IRS. So your cost basis of $65,000, you actually made $31,000. So a $31,000 profit instead of a $6,000 profit year 4. That is why this is really made for the long-term investor. But it's not what it does in year 4. Year 4 is when you see the drastic major gain over stock. But what does it do year 5, year 10, 15, and 20? If you've got a quality wellbore with quality integrity and long-term reserves, it's not uncommon for these wells to last 20 to 50 years. And you're right, it's not going to make $2,000 a month every month. That is just for demonstration purposes. You will have highs, you will have lows, and everything else in between. And that's why we like to talk a lot about the quality of the wellbore itself. But not taken away from the stock market, it is a great place to put your funds. But year to date, you're down about 20%. So it was a great time for me to show somebody that same money that you deemed safe is not as safe as you may think it is. Look at alternative investments that have great tax benefits that turn that investment into monthly cash flow, and long term, it is a great place to diversify your money. Thanks for watching.